Silver has stunned global markets with a move few anticipated at this speed. In a dramatic shift that has reshaped the commodities landscape, the metal has surged into record territory, drawing intense scrutiny from traders, investors, and analysts around the world as questions rise over how far this rally can go and how stable it truly is. Silver prices have moved sharply into focus on global markets. On January 29, 2026, silver crossed the $120 mark per ounce, reaching a new all-time high and drawing intense attention from traders, investors, and analysts worldwide. The metal's rapid rise has pushed it from the outer edges of the commodities space to the center of market discussion. This historic move comes after an extended rally that has delivered substantial gains over the past year and strong performance so far in 2026. Alongside the surge, however, concerns are growing over rising volatility and the possibility that prices may be moving faster than underlying fundamentals can support. Silver reached a peak level of more than $120 per ounce on January 29th, setting a new record and igniting debate across trading desks around the world. The rally has been notable not only for the level achieved, but also for the speed at which prices climbed. Over the past year, silver prices have increased by nearly 300%, placing the metal among the strongest performers in the broader commodities market. In 2026 alone, silver has already recorded gains of 64%, further highlighting the intensity of the move. As prices broke through previous highs, investors began weighing whether silver is entering a new phase of sustained value or approaching a period of adjustment. The immediate reaction across global markets was strong as silver briefly touched $120.46 per ounce. Trading activity accelerated rapidly, reflecting heightened interest from both speculative and hedging participants. Futures markets showed a sharp rise in volume, with approximately 81,000 contracts traded, far above recent averages. This surge in activity signaled elevated engagement from market participants responding to the rally's momentum. The sharp increase in volume underscored the level of attention surrounding silver as prices climbed to historic territory. The rally has also been shaped by tightening supply conditions. A global shortfall estimated at 30 million ounces has strained available supply, contributing to faster price increases than many analysts had previously expected. Physical demand for silver has risen significantly, particularly since late 2025. Demand for 1 kilogram silver bars has increased by more than 500% over this period, reflecting strong interest from buyers seeking direct exposure to the metal. These developments have placed the current move among the most aggressive commodity price breakouts observed in financial markets, based on both magnitude and pace. Silver's appeal has been reinforced by its dual role within the global economy. The metal functions both as a store of value and as a key industrial input. Demand from industrial sectors has remained strong, particularly in areas such as solar manufacturing, artificial intelligence infrastructure, and advanced electronics. These uses have added pressure to already constrained supplies, further supporting higher prices. At the same time, silver has attracted investors who view it as a more accessible alternative to gold, particularly for those unable to afford higher gold prices. This shift in investor behavior has added momentum to silver's upward move. The broader precious metals environment has also played a role in supporting silver's rise. Gold has reached a high of $5,600 per ounce, and its strength has influenced sentiment across the sector. Rising geopolitical tensions, particularly involving the United States and Iran, have contributed to renewed demand for safe haven assets. This environment has coincided with a weaker U.S. dollar and expectations of a reduction in Federal Reserve interest rates, factors that tend to support non-yielding assets such as precious metals. Central bank accumulation of gold and inflows into gold exchange-traded funds have reinforced the sector's strength, indirectly benefiting silver. Despite these supporting factors, caution has begun to emerge among market observers. Bank of America has identified silver as one of the most overheated assets globally, noting that prices are approximately 30% above long-term fundamental averages. This assessment has added to concerns that sentiment may be playing an increasingly dominant role in driving prices. The gold-to-silver ratio has fallen to 45-1, its lowest level in 14 years. This shift suggests that silver may be advancing at a pace that exceeds sustainable valuation models, according to analyst warnings cited in the article. Volatility has already become more visible as prices move at elevated levels. Intraday declines of up to 6% have been recorded, demonstrating how quickly sentiment can change during periods of rapid price movement. As more retail investors enter the market and futures positions accumulate, the likelihood of sharp corrections has increased compared to earlier stages of the rally. The article notes that while a crash is not described as inevitable, the probability of significant price swings has risen as prices accelerate. Recent price action has highlighted this instability. After reaching an intraday high of $121.64 per ounce, Spot silver later declined by 6.6% to $108.84 per ounce. Even after this pullback, silver remains up more than 50% so far this year, supported by supply deficits and momentum-driven buying. These movements have reinforced both the strength of the rally and the risks associated with heightened volatility. As the market assesses these developments, discussion continues over whether silver will experience further sharp moves or enter a period of adjustment following its historic run. The article presents a range of views from analysts, reflecting differing expectations about near-term price behavior while staying anchored to current market conditions. The focus remains on how supply constraints, investor participation, and broader macroeconomic factors are interacting at current price levels. With silver now firmly above previous records and trading activity elevated, the metal has become a central topic across commodities markets. The combination of strong demand, constrained supply, and rising caution has created a complex environment that continues to evolve rapidly. As attention shifts from the initial breakout to the sustainability of current levels, the next phase of the silver market is unfolding under close scrutiny. As silver remains at the center of global market attention, the focus now turns to the underlying forces that have driven prices to unprecedented levels within a relatively short period of time. The rally has unfolded against a backdrop of tightening physical supply, surging investment interest, and expanding industrial demand, all of which have converged to push the metal far beyond levels seen in previous cycles. Market participants continue to assess how these elements have interacted to produce one of the fastest and most aggressive advances in the history of the silver market. One of the most significant contributors to the surge has been the growing imbalance between supply and demand. According to the article, the silver market is currently facing a worldwide supply shortfall estimated at 30 million ounces. This gap has placed sustained pressure on available inventories and has limited the market's ability to absorb rising demand without a sharp adjustment in prices. The shortage has not developed overnight but has intensified over time, eventually reaching a point where the effects became visible through accelerated price movements. As supply constraints tightened, prices began to respond more rapidly than many analysts had anticipated. Physical demand has played a particularly important role in shaping the rally. Since late 2025, purchases of physical silver, especially in the form of 1 kilogram bars, have increased dramatically. The article notes that demand for these bars has risen by more than 500% during this period. This surge in physical buying reflects heightened interest from investors seeking direct ownership of the metal rather than exposure through financial instruments alone. The scale of this increase has contributed to the strain on supply and has reinforced upward pressure on prices. At the same time, silver's dual role as both an investment asset and an industrial commodity has amplified demand across multiple fronts. Industrial usage remains strong, with the article highlighting continued growth in sectors such as solar manufacturing, artificial intelligence infrastructure, and advanced electronics. These industries rely on silver for its conductive properties and other technical characteristics, and their expanding activity has increased consumption of the metal. As industrial demand has risen alongside investment demand, competition for available supply has intensified. Investor behavior has also shifted noticeably during the rally. With gold prices reaching $5,600 per ounce, some investors have turned to silver as an alternative means of gaining exposure to precious metals. The article notes that investors with more limited capital, who may find gold increasingly difficult to purchase, have moved towards silver as a more accessible option. This shift has broadened the base of silver buyers and has added momentum to the market as new participants entered during the rally. The futures market has reflected this heightened interest. Trading volumes have increased sharply, with approximately 81,000 contracts recorded, a level that significantly exceeds recent averages. This surge in futures activity indicates a strong mix of speculative positioning and hedging behavior. Market participants have used futures contracts to capitalize on price movements or manage exposure, contributing to increased liquidity but also to heightened volatility. The rapid buildup of positions has been closely watched as an indicator of how sentiment is evolving. Broader macroeconomic and geopolitical factors have further supported the move. The article points to rising geopolitical tensions, particularly between the United States and Iran, as a factor that has revived demand for safe haven assets. In periods of heightened uncertainty, precious metals often attract increased attention from investors seeking perceived stability. This environment has coincided with a weaker U.S. dollar, which has made dollar-denominated commodities more attractive to holders of other currencies. Expectations surrounding U.S. monetary policy have also influenced market conditions. Anticipation of a reduction in Federal Reserve interest rates has reduced the opportunity cost of holding non-yielding assets such as silver. Lower interest rates tend to diminish the appeal of yield-bearing instruments, thereby increasing relative interest in precious metals. These expectations have contributed to supportive conditions for silver prices, reinforcing the broader upward trend. Gold's performance has remained an important reference point throughout the rally. The article notes that gold's strength has been supported by central bank accumulation and inflows into exchange-traded funds. While these developments directly affect gold, they have also had an indirect impact on silver by strengthening overall sentiment toward precious metals. As gold reached record levels, the positive momentum extended across the sector, further boosting silver's appeal. Despite these supportive drivers, the article makes clear that concerns have been building alongside the rally. Analysts have increasingly questioned whether prices are being driven more by sentiment than by sustainable fundamentals. Bank of America has described silver as one of the most overheated assets in the world, citing prices that are roughly 30% above long-run fundamental averages. This assessment has added weight to arguments that the market may be vulnerable to heightened volatility. Another metric cited in the article is the gold-to-silver ratio, which has fallen to 45-1, its lowest level in 14 years. This shift suggests that silver has been rising at a faster pace relative to gold. Analysts referenced in the article warn that such a low ratio may indicate that silver's rally is being fueled increasingly by enthusiasm and momentum rather than by scarcity alone. These warnings have prompted closer scrutiny of whether the current phase of the rally represents a sustainable repricing or a late-stage surge driven by sentiment. Volatility has already emerged as a defining feature of recent trading sessions. The article highlights instances of intraday declines reaching 6%, underscoring how quickly prices can move when momentum shifts. These sharp swings illustrate the risks associated with crowded positioning and rapid price appreciation. As more retail investors enter the market and futures contracts accumulate, the potential for sudden reversals has increased. The question of whether silver is approaching a turning point remains central to market discussions. While the article does not state that a crash is imminent, it emphasizes that the likelihood of significant corrections has risen compared with earlier stages of the rally. The combination of elevated prices, increased participation, and growing caution has created an environment where sentiment can change rapidly in response to shifting conditions. As silver continues to trade at historically high levels, the balance between strong demand and rising warnings remains delicate. Market participants are closely monitoring price behavior, trading volumes, and broader economic signals to gauge the next phase of movement. The silver market now stands at a critical juncture, shaped by record highs, intense participation, and growing caution, as investors watch closely to see how this historic rally ultimately unfolds. Stay informed on the latest market developments, share your thoughts on where silver may head next, and subscribe for continued coverage of major global financial stories.